Welcome back to the Eric Krown Crypto Channel. Wishing you a happy, healthy start to this nice Friday morning over here as we wrap up this week. A week a bit fraught with peril, as yesterday we were looking at higher probability setups to the downside, especially with the daily, but also on the 30-minute time frame as well. So I wanted to follow up on these, what it kind of means for the short-term picture, and then thread it back into the daily as well, assuming that time does allow. Other than that, I do want to humbly request that if you find this content valuable or meaningful, or if you even hate it, just consider liking and subscribing. It's all good, man. It's all good. So let's just jump right into it right in over here. I want to first follow up on yesterday's short-term time frame analysis. Bitcoin was trading right around here. Let me just double check. Yes, indeed. Okay, you can see this. And that was the closure above the blue 50% of historical returns range highs. That provided the impetus for a short-term downside setup, giving us a downside bias on the short term. And then obviously the daily had it as well. Cross-checked with a decline in volatility, which happened right here on the BBWP indicator. That then set into motion these statistics relevant over here. With 30-minute time frame, this has had a higher probability to play out a downside move than an upside move, about 72% strike rate in this case. About 10 hours expected on average for this one to play out in the downside fashion. And as far as returns go, we would expect about a 1.71% move to the downside, maybe even as much as a 2.5% move to the downside. Obviously, both of those were hit, but I do want to call specific attention to the timing of this, as you can see from that particular setup to that low right here, which was about a 160, 170% move. That was about, 8.5 to 9 hours. So right in alignment with those stats. Yes, Bitcoin did peter on a little bit further south, and that's what we were looking at the 4 hour and the daily time frame for. So if we go over here to the 4 hour time frame, we'll see very, very quickly that that yesterday's range lows on the 50% for this blue area right here was right around 22,350. And we're saying, hey, look, the 4 hour and daily are starting to line up here. If you see a break below that region, expect, a nice girthy red dildo party, of which that's what it's looking like. I woke up to this morning. Very, very nice. Anyways, yes, you can see that Bitcoin's almost played all the way down to the next 80% of historical returns range lows on the 4 hour time frame. We'll bring with the daily here as well, because it'll be relevant a little bit later for what I think is kind of the medium term worst case scenario, which, surprise, surprise, is going to be basically like mid to low $20,000 territory, also around one of the major CME gaps. So short term on the 4 hour time frame, would this be an area to potentially be looking for a bit of a short term bounce? Definitely possible. But the daily does still say that there is risk lower. So I want to be very, very clear about that. And we'll go over a little bit later at the end of this video what the sort of pivots are for that, essentially the daily suggesting that, hey, well, you might see some short-term bounces. Do be aware of this. Anyways, in this case, I do want to bring up now the 1 hour time frame. So the 1 hour time frame is loading as usual, because it takes fucking forever to load. You've got a bunch of caretakers in the background. Calculate this one out. Come on, baby. You can do it, TradingView. You can do it. I know you can. All right, there we go. So similar to yesterday's setup, except opposite of yesterday's setup, we are starting to see something relevant on the hourly time frame. In this case, you can see several closes below the blue 50% of historical returns range lows starting right here. Again, we can go ahead and cross-check for a decline in volatility plus those closures below that range low, which happens right here, actually. And from that point, we can then go set into motion these statistics, which would actually be, let me just double check. Yeah, here's the hourly, which would actually be a higher probability for a short-term upside move. Now, just like we've explained before with this particular setup, there is no 100% certainty with it. But what's very valuable, at least in my opinion, is that it gives us very specific areas of interest for both for both validating a failure condition and then also what to expect as far as returns go for both sides, which is in my opinion, like really fucking important. So as far as this one goes, it also has a 72% strike rate. About 10 hours as well, which is rather interesting, similar to the 30-minute. If we do expect it to be a winner, meaning in this case that would be a short-term upside movement, so that'd probably be around the time that U.S. markets open later. And then if it is going to be a loser, about 70% more at 17 and a half hours or so. So in that case, that would be more downside price action. We'll talk about failure conditions in a second, but as far as average returns go, in the terms of in terms of a bounce, on average about 20%. Again, first standard deviation right here. You know, you might see a little bit lower, a little bit higher. Fair enough. And then if it does fail, then probably looking at another 2.5% move to the downside. So let's go back into it right here. First and foremost, what would indicate a failure condition? Well, we need to see a closure below these range lows, basically like 21.6-ish. Yeah, 21. You could say 21.550 or so if you're using like a very low term time frame, like an hourly. But 21.6. As far as the medium term time frames go. In that case, we can apply. Let me just double check. Yeah, about 2.5% to the downside. And what would that look like? Well, that would put Bitcoin, somewhere down around about 21.3 to 21.250, somewhere around there. So that would be the next move down if we do see continuation. Based upon that failure condition. In the chance that it does continue to, in the event that it does play out to the upside, meaning that it doesn't validate those downside conditions, then we'd probably be looking at about, maybe a 2% move to the upside, which, personally speaking, that would really start to indicate to me that this is a trap. I mean, that would put Bitcoin back around 22,300. Let's see what the bottom side of the first standard deviation looks like right there. Yeah, 1%. That seems more reasonable if it is going to be a failed bounce, but a bounce nonetheless. And yeah, that would put Bitcoin at about 22, 100, 150 or so. Somewhere right around this spike right here. So that would kind of make more sense to me. So basically what I'm trying to say is that if you do start to see Bitcoin crawl back above 22.3, you actually probably are going to see a trap from this region if that were to happen. Now, again, I want to reiterate my stance on the higher term timeframes. Risk remains to the downside. More things point to more downside than not as of the current moment. But hey, that is in there. And again, failure condition very, very clear. 21.6 or 21.550, depending upon your time frame. All right, cool. I forgot my damn phone, so I can't reference my notes, but I'm just going to go off the top of my head right now. We can now go reference stochastic momentum, see where the pivots are, see if anything makes particular sense at the current moment. And we can see on the 12-hour time frame, downside momentum remains as long as Bitcoin's below 22.5. Again, you're starting to see it get pretty low here. But volatility is just starting to peek its head up, so there is that. 6-hour time frame, again, very, very low here in the critical zone. Downside momentum remains as long as Bitcoin's below 22. 4-hour time frame, 22,200 pivot, and hourly is probably going to already be up. Let's see. Yeah, it's going to try for an up here above 21,850 or so. So what does that likely say? Well, you'll probably notice that all of these time frames are basically at or actually they are all basically below the critical zone. So, if Bitcoin is going to try for a short-term bounce, probably comes from here. And again, short-term bounce, not the same thing as reversal. Short-term bounce can come back up, a little bit above 22, maybe even to 22,100. But if you start to see things pop back above 22.3, that's where you're going to see all of these start to turn up, and you're probably going to see a bit of a trap. In this case, there would just be a quick down move, then back up, and Bitcoin basically gets to play back in the prior range, this fucking god-awful range right here. But again, that would imply that that would imply that Bitcoin digs in here and then works its way back up above those pivots. But here's the thing, and here's the big focus, and here's why I'd say that statistically speaking, risk remains to the downside for now. Same thing as yesterday. So it was this particular setup over here, the daily volatility versus stochastic momentum signature. The daily volatility represented by the BBWP indicator, as you can see right here, getting down towards extreme lows, which are defined as 10 percentile or lower, and then expanding from those extreme lows, coupled with the direction of the stochastic oscillator here, has led to some pretty high probability setups throughout the history of Bitcoin, actually. You can see I've backtested basically all of them on the chart, and there are many. So we'll go into my spreadsheets soon enough, but for right now, we can see that the daily stochastic oscillator remains with downside pressure, and volatility is very obviously expanding off this low right here. Here's the thing, though. I would argue because we see volatility not really spend a lot of time at extreme lows like you saw over here in December before expansion. this move probably isn't going to be one of like the bigger moves. And when I say one of the bigger moves, I'm talking like the more recent one was 26%, right? So it'd probably be on the lower end of that. So let's go reference the data over here. In this case, the short played out, obviously. And so, 13 out of 15, did play out in that fashion. So it's going to have about a 69% win rate soon enough. So that's really nice. Or it's actually going to be 70 right on the dot, 14 out of 20. In this case, the average return that we have seen from that particular setup was about 20%. But like I said, because we're not really seeing like a significantly like a really strong compression phase right here. It's just kind of like a touch and a go. I would say that we're a lot more likely to see this one end up somewhere around the bottom side of the first standard deviation, which is like a 12% move on average. So I'll give you an example. Of course, at the end of the day, make your own decisions, right? But yeah, here's the most recent example. This one happened to the upside. Again, just a quick touch and then go. This one was only 3% to the upside, like not even worth talking about. Another one over here. Again, a quick touch and a go. This one to the downside, about 15%. So again, a little bit more in that case. Do we have another one? Yeah, we have another one right here. This one was another one to the upside. Again, just a little quick touch and go. And this one was, negligible, under 9% move right there. So not anything to write home about. Anyways, the point that I'm trying to make is that based off of that, and based off this setup, probably wouldn't be looking for like a humongously nasty downside move. Based off those stats. So let's just see what would happen if you shaved off 12% off current price action. Sorry, let me actually get it from the high. There we go. Okay. 12%, 12.5% puts you at about 21,250. That sounds really, really fucking familiar, doesn't it? If we go back over here to the 4 hour, I think it was, or was it the daily? It was the daily. Yeah, that's right. The daily, let me just get rid of all this shit. No, it wasn't the daily. What time frame was it? Damn it. Maybe it was the hourly. Yeah, it was the hourly. The next sort of range lows coming in right around that region. And then also, if we throw back on our fibs here, let me just pull it out a bit. We can see the 382 coming in around that region as well. So I would be looking at that as another potential bounce point, maybe even a low. If it goes a little bit closer towards the average, maybe we're looking like 15% down. Let's see what that would look like. That would put Bitcoin basically at the mid/upper 20s, and 15% probably puts it like right at the CME gap, which is right in this region right here. So ultimately, I do think that I do think that Bitcoin's still in higher low watch right here. At least that's what I'd be looking at. I'm really not concerned for the long term, as long as Bitcoin is above about 20,000, 20,500 or so on a closing basis. Until then, I'm kind of on higher low watch, and I'm, probably looking a little bit lower. But ultimately, I'd be looking at those areas of interest. So yeah, I think that's probably going to do it for today's particular video. Yeah, we're 13 minutes into this bitch, so I think it's a good place for me to send you on off. As always, I want to be wishing the best. Shield Bybit a little bit as well. They got their promotion going on for 0% on maker fees for derivative contract orders, meaning that, well, it's just less fees if you use limit orders, with my link in the description below. Of course, if you're not an active trader, don't use it, or if you don't want to use it, don't fucking use it either. Just if you don't like it at all, don't use it. It's all good. I'll let you be the decision maker for that. But other than that, I want to be wishing you the best as always. Take care, much love, and see you hopefully soon.